has been focused, I think, quite clearly on a couple of things this year. One, the infrastructure play in terms of the Nvidias of this world, and secondly, the hyperscalers, Microsoft, Amazon, and Google, those cloud players as well. So going into 2025, where do you think the focus is going to be for investors and yourself? Are you still looking at Nvidia as a key part of this AI equation?
Yeah, so this year, we've been really focused on the AI infrastructure layer of this new technology stack. So first of all, you've got to build out this new compute infrastructure before you can monetize it. So this is not just the silicon, these are also the semiconductor equipment names, the likes of Applied Materials, also the networking names, the Broadcoms, the Amphenol's, Aristas of this world. These are all really crucial components to scale this AI infrastructure. On top of that, you've got the model providers. For the most part, we view these players as quite commoditized. It's a complete arms race to build these large foundation models. On top of that, you've got the engineering tools who sort of bring AI to companies and customers, and then you've got the applications. And the value at the moment resides still in that AI infrastructure layer, but we see that moving up the stack into next year. So we're focusing more of our attention on that application layer, because that's also where you're going to see the largest amount of disruption. You've got a lot of AI startups going after the likes of Salesforce. But the AI infrastructure as it pertains to Nvidia, that doesn't really go away, because what we think that we're seeing here is the biggest platform shift since electricity. And when you get these big technology platform shifts, the platform economics normally go to one, maybe two players. If you think about the mobile transition, that was Apple. This is Nvidia. And the key misunderstanding about Nvidia is that it's a chip provider. We think that looking at the company through this framework, looking at this company through the framework of backwards-looking hyperscaler capex is fundamentally the wrong way to be looking at this company. Nvidia is actually positioning itself to be the operating system for this new AI-infused software that we're going to really start see come to market from next year.
Nvidia has performed exceptionally well in 2024, as seen by the roughly 180% increase in its stock price so far this year. Nvidia's impressive ascent places it at the head of the semiconductor sector, surpassing both the Technology Select Sector SPDR Fund XLK EDF's 22.6% increase and the Zacks Semiconductor, General Industries' 127.5% gain. Nvidia is currently the second most valuable publicly traded corporation in the United States, with a market capitalization of $3.395 trillion, behind only Apple, $3.622 trillion. Nvidia's incredible rise, which has seen it join the elite $3 trillion club alongside Microsoft, begs the question, has it peaked, or is there still opportunity for growth? Nvidia's dominance in artificial intelligence, AI, especially generative AI, is the foundation of its explosive growth. The demand for Nvidia's cutting-edge graphic processing units, GPUs, which power these applications, has increased as companies use AI more and more to increase productivity. The global generative AI market is expected to expand at a compound annual growth rate, CAGR, of 39.6% from 2024 to reach $967.6 billion by 2032, according to Fortune Business Insights. Nvidia's GPUs are essential for businesses investing in AI infrastructure because of their quick growth. Large-scale AI models can now execute complex computations thanks to Nvidia's state-of-the-art technology, which offers unparalleled processing capability. Nvidia is well-positioned to rule this market for years to come thanks to its generative AI applications, which span sectors like manufacturing, healthcare, and automobiles. The impact of Nvidia goes far beyond AI. The company's GPUs are essential to developments in industries including manufacturing, healthcare, and automobiles. Nvidia's automotive solutions aid in the development of autonomous vehicles, a market that is anticipated to grow rapidly over the next 10 years. Nvidia's GPUs are transforming medical diagnostics, boosting imaging procedures, and enhancing patient care in the healthcare industry. In the eighth sector, Nvidia is positioned as a robust and varied growth engine due to its wide multi-industry application. Furthermore, Nvidia's reliable data center solutions are becoming more and more popular. The need for robust data center infrastructure is increasing as more businesses invest in cloud and edge computing, making Nvidia's data center division a vital growth engine. As companies step up their efforts at digital transformation, this industry alone is expected to greatly increase the company's sales, securing Nvidia's potential for long-term growth. Nvidia's superiority is demonstrated by its financial success. The corporation reported a startling 94% year-over-year growth in revenue in the third quarter of fiscal 2025, along with a 103% increase in non-GAAP earnings per share (EPS). Management anticipates that fourth quarter revenues would increase to $37.5 billion from $22.1 billion in the previous year. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video. According to the consensus estimate for Nvidia's fiscal 2025 and 2026 revenues and earnings, the business is expected to continue growing and maintain its market leadership in a number of industries, including professional visualization, gaming, and the automotive industry. Nvidia's solid balance sheet is a testament to its financial strength. The company's cash holdings increased from $34.8 billion on July 28 to $38.4 billion on October 27, 2024. Nvidia produced $45.2 billion in free cash flow and $47.5 billion in operating cash flow during the first 3 quarters of fiscal 2025. In addition to fostering continuous innovation, this financial stability acts as a buffer against market fluctuations, enabling Nvidia to seize new possibilities. Nvidia's pricing is still appealing in spite of its impressive performance. The stock is trading below the Zacks Semiconductor General Industry average of 37.83 with a trailing 12-month price-to-earnings P/E ratio of 35.15. This implies that the stock is currently trading at a relative discount, which could benefit investors. Nvidia's growth trajectory is far from over, despite its stunning 180% year-to-date leap. Nvidia is a pillar of the semiconductor and technology industries thanks to its leadership in AI, wide range of applications, and strong financial results. Nvidia is a strong option for investors looking to get involved in the AI revolution and beyond. For investors hoping to ride the wave of technological advancement, the stock is a must-buy due to its favorable valuation and long-term prospects. At the moment, Nvidia has a VGM score of B and is ranked number 2, buy. According to our analysis, the finest investment opportunities are provided by stocks with a VGM score of A or B when paired with rank number 1, strong buy, or number 2. Right now, Nvidia stock seems like a strong investment option. Although there are many excellent stocks in the computer and technology area, investors should always seek out businesses that are outperforming their competitors. Is Nvidia currently one of those stocks? To discover out, let's examine the stock's performance so far this year. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video. Currently ranked number 2 in the sector rank, Nvidia is part of our computer and technology category, which consists of 618 distinct firms. By calculating the average rank of the individual stocks inside each of our 16 sector groups, the sector rank evaluates the strength of each group. The rank is a tried-and-true method that highlights earnings projections and revisions, showcasing a range of stocks that are exhibiting the ideal traits to outperform the market in the upcoming 1 to 3 months. At the moment, Nvidia has a rank of number 2, buy. The consensus estimate for Nvidia's full-year earnings has increased by 4.8% in the last 90 days. This indicates a more optimistic expectation for the stock's earnings and an improvement in analyst sentiment. According to the most recent data we have, Nvidia has returned roughly 179.9% since the year began. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community.